Welcome back, finance fans. Are you ready to dive into the intriguing world of Occidental Petroleum Corporation, ticker symbol OXY? We're about to break down the numbers behind this oil and gas giant in a way that's both fun and informative. Let's get rolling. First up, we have the P/E ratio, a classic metric for evaluating stock prices. OXY's trailing 12 months P/E ratio stands at 16.95. For a bit of context, that's significantly above their 5-year average of 10.96. What does this mean? Well, OXY might be trading at a premium compared to its historical norms. Looking forward, the forward P/E ratio is 13.40. This suggests that investors are expecting better earnings in the future, hence a bit of optimism there. Next, let's talk about the P/G ratio, which is sitting at 2.02. This takes into account OXY's earnings growth and gives us a more nuanced picture. Generally, a P/G above 1 might indicate that a stock is overvalued relative to its growth. So, tread carefully here, investors. Now, let's see how much skin the insiders have in the game. Insider ownership is at a modest 0.3%. While it's not huge, it shows that some of the company's executives do have a stake in its success. But it's always nice to see more insiders with substantial holdings. Now let's talk about returns. The return on equity stands at a healthy 13.65%. This is a solid return, indicating decent profitability. While return on assets at 5.65%. A bit lower, but still respectable for the industry. Finally, the return on invested capital at 10.16%. tells us OXY is doing a good job of generating returns from its capital. Occidental Petroleum's EPS is a modest 3.66. Looking ahead, analysts expect an EPS growth rate of 8.4% over the next 5 years. This company has shown a negative evolution in EPS over the last 9 years, with a compound annual growth rate of minus 6.37%. Not exactly what we like to see, but there's always more to the story. Here's a bright spot. Free cash flow per share has shown a positive evolution, with a CAGR of 28.34% over the last decade. That's a strong indicator of financial health and operational efficiency. Let's talk about dividends. Occidental Petroleum offers a dividend yield of 1.36%, with a negative 11.34% dividend growth rate over the last 10 years. The dividends were growing positively until 2019, followed by massive cuts in 2020 and 2021, but they've started to climb again since 2021. Operating margin is at 21.75% and the profit margin is 12.71%. These margins indicate that Occidental Petroleum is not just making money, but making it efficiently. Over the last 8 years have seen positive growth in both revenue and earnings for OXY, with a notable dip in 2020 due to the global situation, leading to dividend cuts. This has impacted their market performance, resulting in lower returns compared to VO over the past 5 years. Occidental Petroleum's debt situation looks manageable with a debt/EBITDA ratio of 1.55 and debt/free cash flow ratio of 4.31. This means they're not overleveraged and are keeping their debt in check relative to their earnings, but Wortley relatively to his cash flow. With a market cap of $54.93 billion, OXY is a heavyweight in the energy sector. Over the last 52 weeks, the average price return is a modest 4.31%. Finally, analysts predict an average price of $71.33 in the next 12 months, which is a 15.14% upside from the current price of $61.95. However, based on my calculations, the fair value is around $59.25, suggesting the current price is pretty close to fair value. So, there you have it. OXY is a mixed bag with some promising aspects like solid returns and free cash flow growth, but also challenges like past negative EPS growth and dividend cuts. It's definitely a stock to watch closely if you're interested in the energy sector. Hit that like button if you found this breakdown helpful, and don't forget to subscribe for more deep dives into the world of stocks and finance. Until next time, happy investing.